Hey, what's going on everyone? It's Griffin here and I hope you're all having a fantastic day as always. Now, man, I just had to make today's video because I've had so many viewers requesting that I comment once again on the EV space with these stocks just absolutely soaring over the past couple of weeks. I mean, basically any price point that you manage to get in on for any of these EV stocks over the past couple of weeks, whether it be Tesla, NIO, Xpeng, Workhorse, or whatever, well, chances are that you made some pretty hefty gains. If we look at the entire EV space here, Tesla being the largest and most recognized company in the space, up roughly 40% over the past month. And then we get into these smaller alternative EVs that are just piling on so much liquidity, it's insane. Now keep in mind that these figures are as of pre-market open on Thursday, but NIO here up around 105% over the month, Xpeng is up 230% over the month, Lordstown Motors roughly 50%, and then even other stocks that impact the EV market like SBE is up 150% over the past month. I mean, these are ballistic price movements that we rarely see in the market over such a short period of time and are rarely sustainable for long periods of time, seeing stocks go up 5, 10, 20% daily for a sustained period of time. We could probably even say that gone are the days when retail investors would gladly accept an 8 to 10% annual return on their portfolio investing in diversified index funds because, I mean, come on, 8%, that is one morning in the EV space. Tesla's market cap has now surpassed $500 billion, which is pretty impressive, and we all know at this point that Tesla has been included in the S&P 500, at least they will be included on December 21st, but this is massive news both for the company as well as the EV space in general, both in North America but also worldwide, because it's showing that this space is really rippling through our society. Now, the fact that Tesla will in fact be added to the S&P 500 is massive because this not only means that it's now being recognized by Wall Street as being a stock that, hey, we need to actually take seriously now, which for years Tesla wasn't really taken seriously all that much by Wall Street, but now these massive funds that track the S&P 500 have to buy up massive quantities of Tesla stock to include the stock into their S&P 500 tracked indexes on a proportionate basis to the index fund. So this pretty much means that anyone watching this right now that doesn't actually own any Tesla stock but that does own an S&P 500 index, like for example XUS or VFV if you're Canadian here, is going to be exposed at least a little bit to Tesla stock and the stock's variations over time as of December 21st, when Tesla will indeed be added to the S&P 500. And to be honest, it's actually even hard to wrap our heads around the quantity of cash that tracks the S&P 500 index. We're talking here upwards of $11 trillion of assets under management that track the S&P 500 alone, which is a lot of money. And when you consider the fact that Tesla's market cap is above $500 billion, well, this means that on a weighted basis, the inclusion into the S&P 500 index is going to be around 1 to 1.5% of the index, representing anywhere from around $50 to $75 billion of Tesla stock that's going to need to be purchased and added into these funds that are tracking the S&P 500. So what does this mean? Well, it means increased purchasing of Tesla stock in question, which is going to inherently also continue increasing the demand of the stock and therefore most likely its price. Now on Tesla's tail, we've also got NIO, which is this alternative Chinese EV company that has a market cap currently at the time of filming this video of roughly $70 billion, which is a lot considering the fact that, for some reference here, that is larger than both the market cap of Bank of Montreal and CIBC combined. So really, there's no other way of putting it here that right now the EV rally is absolutely insane, and with all the buzz around EV stocks in general right now, and viewers asking me to comment on this once again, well, I thought I would release this video and share my thoughts on what I may believe is going on regarding this insane rally and what the future may hold for these EV stocks. But are we looking at a bubble situation? Is any of this justified, or will EV stocks just continue to rise? These are all questions that I'm certainly asking myself and that a lot of investors are also asking themselves. So let's speak about this in today's video. As always, if you enjoyed the content, take a second to smash the like button. It really helps my channel out and shows me that you enjoy this type of content. And also make sure to check out the links down below if you want to open up a brokerage account and get some free money for opening and funding your account. So on that note, let's get right into the video. All right, so let's first speak about market behavior right now, specifically for some of these smaller alternative EV stocks like NIO, Xpeng, and Workhorse, because these companies are significantly smaller smaller than the big dog here, which is Tesla. And so for this reason, with all of the hype and speculation around future expectations on earnings and market capture of the EV space regarding the entire automotive industry, well, these stocks have rallied significantly more than Tesla over the past month or so due to their significantly smaller size. Now, the way I see this is there's no denying whatsoever that these stocks will most likely do very well over the coming 5, 10, 15 years as more and more consumers actually start adopting EV vehicles over combustion engine vehicles, and then also combined with the fact that many governments are looking to increase the number of electric vehicles on the road. So, they're looking to either ban and or combined to that provide significant incentives for people to buy these vehicles. Now, we're not diving into the individual financials and production numbers for each one of these specific companies in today's video because this would be probably an hour-long video, but it's pretty much inevitable that over this upcoming 5, 10, 15 year period, well, yeah, each one of these companies is going to face its own set of challenges as it expands its output of vehicles and competes for market share capture. This is pretty much inevitable, but over time, as this transition takes place of combustion engine vehicles to electric vehicles, there's pretty much no denying the fact that most of these companies are going to be thriving in one way or another. But that's just it, right? I didn't say these stocks are going to be thriving over the coming 10 years, which, they probably will, but these are companies. And so for this reason, let's say with a NIO that's currently producing roughly 10,000 cars per quarter, well, at a valuation of 70-ish billion, that's a pretty rich valuation at today's current production relative to market value. And so the way I'm interpreting this phenomenon right now in the EV space, that's pretty much what every investor is speaking about in Facebook groups, on YouTube, etc. Well, these stocks are the new hot stocks on the block. And so I really think that this is materializing some FOMO mentality in tens of thousands of investors who are really trying to get in and not miss the boat on this short-term opportunity. But is it a short-term opportunity? I don't believe that this EV space should be seen as a short-term opportunity. We're also seeing a lot of financial YouTubers speaking about companies in the EV space. Heck, even I released a couple videos 2 weeks back about NIO in particular, and I was stating in those videos that I believe the actual stock price for NIO at the time was kind of expensive. But you know what? The market thought otherwise, and it has since shot up another 20%. But I did also mention that I very much believe that this would be a successful company, at least in China, which has the largest EV market in the entire world. So there is definitely a lot of FOMO that's contributing to stock rallies for these smaller EVs. At least that's my take on it, NIO and Xpeng specifically. And then combined with that, we're also definitely seeing a market that is pricing in the next probably 5 to even 10 years of growth figures for the EV market, which can be somewhat dangerous for shorter term price fluctuations within these companies' stocks, because for the time being, the stock is being traded on hype and not fundamentals, let alone value. Let me be clear though that this is actually pretty typical for growth stocks in general, let alone being in the EV space, which is really hot right now, where trying to justify their current valuations based on current fundamentals is nearly impossible. And rather, future expectations of growth of earnings and just growth of the overall company size, as well as a current price to sales ratio, is typically going to be more indicative of what a fair price point would be for growth stocks. But nonetheless, with these EVs, we're still seeing pretty rich valuations with years upon years of expected earnings being priced into the share price. So these stocks are without a doubt being traded hard in the market for short-term gains by speculative traders. But what's interesting about the EV space is, unlike other growth sectors, well, I think a lot of individuals, including myself, are actually seeing these companies more as longer-term investments, even though they are being traded extremely heavily in daily day-to-day trading. I had fully mentioned this in my previous NIO video, where it wouldn't surprise me whatsoever if we see dramatic price fluctuations both up and down in the short term for NIO stock, which for now has pretty much only been up. But regardless, this is something that inherently comes with higher volatility stocks that have a lot of hype around them. But as a long-term hold, I believe that the company would pretty much undoubtedly be a long-term win once they actually solidify their stake in the Chinese EV market and ramp up production levels where they're able to produce upwards of 50,000, 100,000 cars per quarter. So yeah, with all that said, if we're strictly looking at current numbers for NIO, for Xpeng, for Workhorse, heck, even for Tesla right now, well, of course, things seem completely overvalued and pretty unrealistic. There's no denying the fact that right now, at NIO's current numbers, for example, you can't really justify these valuations. But the thing is, these companies operating in this industry seem to be pretty much in a class of their own, especially Tesla, that has just so many different product verticals and growth opportunities ahead. And then over time, as the company continues moving into higher levels of profitability, all of this in a total addressable market that is ever growing year over year, this is going to present massive opportunities for the company's growth in the coming 5 to 10 years. I have no doubt about this. So with that said, let's take a second here to speak about this projected EV market size that investors seem to be so optimistic about. Now, first of all, in the United States, it's estimated that the number of EVs on US roads is projected to reach 18.7 million by 2030, up from 1 million at the end of 2018. This is a pretty staggering growth figure for EV vehicles and is really going to truly represent a massive amount of revenue for these EV companies, specifically Tesla, for personal vehicles. In parallel to this, annual sales of electric vehicles is expected to exceed 3.5 million vehicles in 2030, reaching more than 20% of annual vehicle sales in 2030 in America, which is actually a significant portion of the market if we consider the fact that EV markets are really only starting to catch on as of maybe the past couple of years. And let's also not discount the fact that with a Biden presidency, this is most likely going to kickstart and fuel even further the shift towards electric vehicles, renewable energy, and all these other forms of innovative renewable sources of technology and energy. And even in other parts of the world, like certain Canadian provinces, Quebec specifically, where I actually reside, the Quebec government is looking to have all new cars that are being sold by 2035, they need to be electric. And everything that we just spoke about pretty much all circles back to what's known as the total addressable market for electric vehicles moving forward. And what this total addressable market is in relation to EV stocks rallying significantly over the past couple of weeks and months is that investors are pretty much projecting that over time, the EV market is going to grow in relation to the total car market, thus representing a much larger total addressable market of consumers that are looking to purchase an EV car over, say, a traditional car. And the reason why I'm speaking about total addressable market here is actually because I was recently watching a video by Meet Kevin. You're probably well aware of this YouTuber, but he was talking about the total addressable market that investors were projecting for the cannabis industry back in 2017, 2018, when all of these stocks were also going ballistic. And this really had me thinking because I released some videos 6 months ago or so speaking about the cannabis industry. And what I was talking about in those videos is that after the hype and euphoria was gone in the 2018 rally of cannabis stocks, well, at the end of the day, once the dust all settles, these companies are just that. They're companies that have to actually produce vehicles and generate revenue through selling their products or services, whatever they have to sell. Well, at the end of the day, they're a company that needs to produce in order to survive. Now, this to me is a bit more of a reality for some of these smaller alternative EV companies like NIO and Xpeng, for example. Tesla is really just a powerhouse here in the EV space, and they also have just so many other product verticals and revenue streams now and moving forward. Still very much being the largest and most influential EV company in the space, Tesla is most likely going to continue dominating in America as well as even in China, at least for the time being. Tesla is a company that's set to grow at a minimum 50% year over year. So yeah, if you project these growth figures over the next 5, 10, 15 years, no doubt Tesla is going to become one of the most influential and largest companies in the entire world, probably surpassing a market cap of $3 trillion at that point. And their inclusion in the S&P 500 is huge for the company. So Tesla, honestly, I could go on and on about them for an entire video. Actually, if that's something that you'd be interested in, let me know down in the comments and I'll share my thoughts about the company's growth as well as their stock right now, because this actually is something a lot of people have asked me, is it too late to get in on Tesla? What are my thoughts, etc. So if that would be of interest to you, let me know down in the comments. Okay, so with all that said though, what am I currently doing, right? Am I purchasing some of these stocks? Am I holding? Have I sold some? Well, to be fully honest, I got in on Tesla actually pretty late. I've been holding it for a couple of months now, got in at around $380 a share and made a small to medium-sized position in the company. Since purchasing those shares, yes, the stock value has gone up dramatically, I think like 40% or something like that, but even at that, I'm not going to be selling, and it's one of those stocks that I really just plan on holding long term, and depending on how the market trends and how I feel, I might be bolstering my position. But right now, I mean, truth be told, it is pretty expensive, but you have to look at this company from a different lens and really project it out long term. So yes, I am bullish on the company and the EV space in general, and I'm looking at this as a long-term play exclusively. I'm not someone who's looking for these shorter term gains. Even though it is really nice to see short-term gains in your portfolio, I still fall back to my investor mindset where I'm looking to invest in companies that I believe in long term. And in terms of NIO, same thing really. I released that video a couple weeks back, and I was saying that I could very well see the stock go up, go down. It's a pretty volatile stock right now that's seeing a lot of buzz, which inherently brings a lot of volatility. Now, I had purchased some shares at around $38 a share, and I haven't sold since. But with NIO specifically, I don't plan once again on selling, but I could very well see the stock or even expect it to drop down in the short term. That's not something that to me would be out of the question for this company. But at that point, if we do see the stock dropping back down to those low 40s, mid to high 30s range-ish, I would probably just buy more and hold it for the future, as this company, I believe, is going to do well over the long term, at least in the Chinese market. But are we in an EV stock bubble, right? That's the question that's on the table here. And are we going to experience another situation like back in 2018 that we experienced with cannabis stocks, where they ran up dramatically and then pretty much popped right at the top and it dropped back down to levels that were a bit more realistic for what these companies truly were in terms of current value? Well, I'm not necessarily saying that we are in an EV bubble. It's honestly hard to say, right? From an actual valuation standpoint, based on their production and their numbers right now, no doubt about it that they are significantly overvalued and not worth what they're trading at. So for this reason, could we see a short-term price fluctuation? That's something that we could see. That is something that could very well be on the table, and that as investors long-term, we should not discount. Now, with that said though, in terms of Tesla specifically, I really don't see this stock dropping back down to levels in the 300, even low 400 range. I'd be really surprised with all the news that's going on right now about the company, their growth projections, as well as their product verticals, revenue models moving forward, etc. So essentially what I'm saying here is that short term, if you're looking to get in any of these EV stocks pretty much, other than Tesla, which is kind of its own beast here, well, don't be surprised if you see dramatic short-term price fluctuations. It would only make sense from a fundamental standpoint, but at the end of the day, fundamentals don't seem to have any reign here with EV stocks, and even in terms of some growth stocks, but EV stocks in general, they're kind of in their class of their own in terms of companies that are just seeing extreme hype and speculation moving forward. With that said though, if you're looking to invest long-term, such as myself, some of these companies, especially Tesla, NIO, could very well be some great additions to your portfolio, and these shorter term price fluctuations will probably just be hiccups and bumps in the road for your long-term hold over the course of the next decade, for example. Those are my thoughts. What do you think? Do you think that we're in an EV bubble here and now it's gonna pop? We're gonna see 30, 40, 50% price corrections on some of these stocks, making it, let's say, a Black Friday actually coming up on Friday. What are your thoughts? Let me know down in the comments. I'd love to know. And if you enjoyed this video, make sure to smash the like button. Really helps the channel out, and consider subscribing and hitting the bell button to be notified on new and upcoming investing content. So once again, thanks a lot for watching today's video, and I'll see you in the next one.